Or your Bitcoin, right? We need to talk about Bitcoin in a minute. I can't wait to hear what Charlie Munger has to say about this. Let's bring in Charlie Munger, the vice chair of Berkshire Hathaway. Bill's going to move over so you can come sit in. Right. Good morning, Charlie.
Good morning.
I just had to get your thought on Bitcoin, this digital currency that's out there that people say, oh, it might be the next big thing. What do you think?
I think it's rat poison.
Put him down as undecided.
Do you understand what they're trying to do with it?
No, but I regard it as deeply flaky.
Deeply flaky. Okay, Bitcoin. Bill, what do you think?
I think it's a technical tour de force, but that's an area where governments are going to maintain a dominant role.
Mm-hmm. Bill? Warren?
I think either Charlie or Bill is right.
Either one of those guys. Charlie, one of the things that I noticed during this weekend meeting was that you and Warren disagreed on a couple of issues, but the one that struck me the most was your issue on corporate tax rates. Warren feels that corporations should be taxed more. They have the money. You say no. Why?
Well, I think it's a disadvantage to have your tax rate less than the tax rate elsewhere in the world. And so I don't think we're in total control of our own tax rates. Meaning I think it would be crazy to have a tax rate in the United States 50% and have it 20% generally throughout the rest of the world.
Do you think that
I'm all for higher taxes, but I think they should be on individuals and consumption and so on. I don't think I like a low corporate tax rate.
Do you think it should be considerably lower than what it is now here in the U.S.?
No.
Just slightly?
Somewhat, yes.
Somewhat slightly. Warren, you disagree?
Yeah, I think that, incidentally, Charlie and I have disagreed on lots of things over the years. We've never had an argument in over 50 years, but we do disagree sometimes. And U.S. taxes corporate taxes are 1.7, 1.8% of GDP. Frequently, I mean, if you go back some years, they were 4%. We did well under those conditions. Business is doing extraordinarily well. And since we have to raise money from someplace, and I see these returns on equity and in business compared to the interest rates being at incredible levels, I just think that if you're looking for who to tax more, I think that corporations should be part of that act.
Well, the banks sure have moaned a lot about how they feel they're overtaxed and that they're overregulated. You both disagreed on that a little bit. You actually feel on the entire banking issue that banks look healthier nowadays. You feel very comfortable about your investments in Wells Fargo, MM&T, U.S. Bancorp as well. But Charlie, you're less optimistic in the long term about banks. What worries you?
I think too many bankers go crazy, and it does too much damage when it happens. So I'm for more bank regulation, not less.
What form should it take?
I would deny their ability to have huge derivative books and all kinds of things.
Do you think the derivatives are still too large a position on some of their books?
Sure.
How do you regulate something like that?
Well, if you let me do it, it would take about a week. What's lacking is the will, not the power.
The will, not the power. Let's talk quickly about the Fed. You had a great quote during the shareholder meeting where you said that back during the first bubble, Alan Greenspan, that instead of taking the punch bowl away before people got totally drunk, they increased the alcohol proof.
I think that's right.
What is?
And I think he's regretted it since, which is to his credit.
Mm-hmm. But what are we doing now? Is there a punch bowl? Is the alcohol proof too heavy right now? How do you see it?
Well, what I said was, if you're not confused by what's happening now, you don't understand it. Even the people in the economics profession are confused.
We're in sort of uncharted waters in terms of yeah. Now, we had a huge problem, so it undoubtedly required a lot of medicine, but we have not yet seen medicine like this dosed out and then the after effects.